Good morning, everyone. Welcome to the Market Prep, soon to be called the opening call. My name is John Hoagland. Thanks for trusting me with your time. Today is Thursday, July the 27th, and there is a lot to unpack this morning. And unfortunately, we did have a little bit of a gremlin. I got him. Here he is. I'm going to put him over here in jail with a lot of help from this little guy, the good gremlin, Gizmo. We caught him. So that's it for the gremlins for today. All right. Well, that said, we're always focusing on accurate context, good risk management, and patience. Took a little bit of patience to get this thing running today. That little gremlin was pretty wily, so it took a little bit to get him, but we got him. Okay, economic numbers this morning. I've got to put my glasses on because there is a lot to unpack here this morning. At 7:15 Central Time this morning, the ECB raised their interest rates by 0.25%, which was expected. Jobless claims this morning, initial and continuing jobless claims, both coming out lower than expected. The initial jobless claims was expected to come in at 235,000. It came in at 221,000. Durable goods core month over month was expected to be flat. It actually raised by 0.6%. The GDP preliminary number, remember there's three numbers for GDP. This is for Q2, the first release. They were looking for 1.8%. It came out a little bit higher than that at 2.4%. The end of Q1, the GDP was 2.0%. So the GDP increasing. Trade balance also lower than expected. 91.8 billion was what was expected. It came out 87.8 billion, so a little bit lower negative trade balance there. Retail inventories, we got pending home sales here at 9 o'clock, 9:30, the EIA natural gas. And kind of a lesser looked at number this morning, but going to be a big number tomorrow is the PCE price index. The Q2 core price index came out at 3.8% when it was expected at 4%. Now, tomorrow is the month over month and year over year PCE that are going to be closely watched by pretty much everybody. If there's an indication, that might be indicating that we're seeing a little bit of slowing in inflation. Now, after yesterday's FOMC release, I believe interest rates are at 22-year highs, yet the stock index futures continue to push higher overnight. On Fed raises rate hikes, but there's hints of pauses possibly in the near future. Powell has committed, however, to keep an eye on the data. September's FOMC meeting promises to be another interesting opportunity. Meta earnings beat street estimates on strong revenues and in a big investment in AI, but the NASDAQ seems to be lagging a little bit, and that I'm sure has something to do with the rebalancing of some of those high-flying tech companies losing some of their grip on the NASDAQ 100 with the rebalancing again. Earnings today, largely positive. We had MasterCard, Nestle, AbbVie, McDonald's, Comcast. I think we also had Shell. There was a little bit of a miss as far as Shell was concerned. And after the close today, we're waiting for T-Mobile, Intel, and Ford. Typically, we're going to be taking a look at what's going on in the VIX this morning, down over 2%. It's under 13. It's at 1290, whereas yesterday it was at this time it was 1410. The dollar index, just taking a good look here, 101.06, a little bit lower than it was yesterday at this time, but higher on the day. And the yield on the 10-year, 3.9%. It was 3.87% yesterday. So continuing to creep a little bit to the upside here. The jobless claims number I'm reading here fell to, of course, 221,000 in the latest week. That's the lowest level since February. So there's some information for you. Make sure you hit the lucky like button, share, comment, question, feedback, heckling, love, and subscribe to our YouTube channel so you get notification when we do go live. We were a little bit tardy this morning getting started. I apologize. I don't really feel tardy, but we're going to get into the charts pretty quickly here because again, there is a lot to unpack here this morning. We've got the euro and the 10-year set to open, including late spikes from yesterday. If you don't know what a late spike is, pay attention because these are important nuances and some of my favorite opportunities to take trades. Starting as usual here in the E-mini S&Ps, we've got little change yesterday. We lost 10,000 in open interest. Volume was a little bit higher, but the settlement price by the end of the day was not even a point away from the previous settlement point. Now we see that the market has finally broken out above weekly kickoff high with some possible gusto. There's at least some momentum in this. We took out last week's high. This was going to be a target-rich area for us, and it was all week long until now. We're holding above it now. We're looking to maintain meaningful trade above the weekly kickoff high. That weekly kickoff high, to be exact, is 46.04 even. What's the next step? All-time highs? 48.08 quarter? Certainly seems to be a possibility here because we've been moving higher over time. The auction has taken several rests. Like Joe says, we got to go up to go down. We got to go down to go up. So we're in a new market state. We are in an upside continuation market state as long as we can maintain, again, meaningful trade above weekly kickoff high today. Look at the 30-minute chart. We're going to be opening with a large gap. We can just see the amount of overnight weaker hands longs that are in this market. We're opening with a gap. If we can't close the gap, gap rules apply. We're looking for opportunities to trade in the direction of the gap, which would be higher. Overnight inventory could bring us a better trade location if we don't see buyers come in right on the open. GDP, I think, was positive. We're still waiting for PCE tomorrow. We got a little bit of a possible hint at what that's going to look like today. Well, balanced breakout rules are certainly applying today. Here's the balance high. We've broken out. Unfortunately, in the overnight session, I didn't get to participate in this, which kind of complicates things for me a little bit today. It's okay. Stay patient. I noticed somebody had said in the comments that this market is now out of balance and anything is possible and anything can happen. ACH. That's one of the things we say here. ACH, anything can happen. We don't know what kind of upside this market can bring at this point. We don't know if we're really overbought. I mean, we lost open interest yesterday. That's an evening of inventory. We had a lot of folks hedging, changing holding positions, removing positions before the FOMC yesterday. GDP is out. It's, I think, positive. Earnings continue to look good. What do we have to worry about? We know that the greed factor is certainly coming in. I'm sure we're feeling in multiple time frames a little bit of loss if we are not leveraged into this upside move. We talked a couple weeks ago about the idea that some of our longer time frame traders were looking for a pullback in order with which to they were looking for a pullback in order to get some more bought. But now I think there may be and have been forced to adjust inventory at higher levels. Is there still money to come in? Today is going to be a cool day to watch open interest tomorrow morning. Hopefully there will be a market prep tomorrow morning. I'm not sure. That may be something that we're going to have to miss, but I'm not sure. If we don't come tomorrow, believe me, I'll be missing you. And then next week, we're looking at the opening of the opening call and fast market. We're going to be trading live markets. It's going to be really exciting, fun, and cool, and hopefully helpful to all of you. But I digress. This market is moving to the upside. I noticed in the chat somebody already saying, I really have to resist the urge to try and pick a top in this. You need some sort of day time frame structure before you do that. It's so easy to, see, here's the high. I'm going to sell against it, get run over, and get your stop. Here's the next high. Well, this is going to be the high now. You get run over and get your stop hit. Be patient. Yes, the market is out of balance. Good trade locations may come very early in the session today because of that. But remember, stay patient. If you miss something, there's another opportunity coming down the pipe anytime soon here. Here's the profile from yesterday. Basically a normal variation trading day, a little bit extreme to the downside as far as the volume and time is spent. Points of control are lower than the center line here. It makes sense that we lost open interest yesterday. This B shape is kind of indicative of long liquidation. If there was any long liquidation, I would expect it to happen before the number came out. But we had the spike to the upside, which ends up being a selling tail. But opening above that changes everything. Here's the upper extreme of the upside digestion that we were in. We're opening above it. If we accept above it, again, there's no limit to how far this market can go. Now look at the NASDAQ. It's a totally different story. The S&Ps are up here, above last week's high, above weekly kickoff high. That rebalancing really kind of put a little bit of a kibosh on the upside here in the NASDAQ because they took so much of the strength of the tech sector and kind of reduced its influence on the NASDAQ. And so I think that's a big part of why the NASDAQ is lagging behind the Dow, the S&P. I don't really look much at the Russell. Maybe we should start doing that. But what does it tell us? Well, what happened in volume yesterday was pretty good. You would expect that. I mean, it was a big day. A lot of gyrations in the trading day yesterday. A lot of FOMO and chasing of price yesterday as well, I'm sure. We didn't change open interest at all. Everybody in a longer time frame position stayed in their long time frame position. So that inert initial balance doesn't help us much today, does it? What are we looking at? Well, here we are looking at overnight inventory exceedingly long. We are looking at a breakout of a short time frame balance here. I'm looking for this market to be able to maintain price above 15,730 to 15,720. These highs here, I think, are important for this market to remain friendly to the upside. Overnight inventory, an adjustment in that is possible. So again, try and stay patient. I know it's difficult because the market is already moving higher. It could drive higher from the open today. It could stumble, pull back, and then trade higher. I don't see that there's a high probability of any type of gap close today. If that happens, then I'd be a little bit worried for the upside at that time. But here's the TPO chart from yesterday. Normal variation, extreme day, a little bit weak as far as excess down here, but we have excess below that on the previous day. Here's the area, a 4-day area of balance that we've now broken out and are opening above, indicating potential acceptance of higher pricing. Doesn't mean price has to go directly higher. It can pull back. We got a lot of overnight longs in these markets. Just try and keep that in mind. It might be difficult to find pullbacks with which to find anything to lean on to limit risk today in both the NASDAQ and in the S&P. What about crude oil? So we've kind of had one day imbalance, inside day, kind of a hangover day, digestion of higher pricing. When we're looking at how an auction process is doing, to me, one of the biggest indicators of acceptance of price is time. Well, this is our third day overall above that weekly kickoff high of 78.20. That's pivotal for us to maintain price above. There is a possible target down below, just below that level. I'm going to point that out to you on the profiles here in just a second. We added 2,800 in open interest yesterday on an inside extended trading hour range. People are still interested in placing bets here. Direction yesterday is a little bit difficult. The focus, I think, fundamentally seems to be right now, instead of worried about supply, it's about demand, increasing demand. So with open interest and volume both higher yesterday on this longer time frame move, I'm starting to give this kind of a C plus. We've fallen into range. You know, if we were just continuing to the upside on higher volume and higher open interest, it would be more like a B plus or an A. But it's still a decent trade. It's still a decent auction. It's doing okay. Here's the 30-minute chart. So here's our 3 days of virtual balance, value not moving very much. Looks like we've opened with a gap and we've closed the gap immediately. So now the fact that we've opened with a gap and we seem to be having trouble showing acceptance above this range, the value area special situation play comes into play. What the heck is that? The value area special situation play states opening outside of the previous day's range, reaccepting value from the previous day's range increases the probability of price reaching the other extreme of value at some point during that trading day or during that trading day, right? So what we're really focusing on here is, are we going to start to see acceptance of range from yesterday? This gap close, is it going to be repellent or is it going to be accepting of price? Is price going to accept being back in here or not? So we've got a ways to go before the value area special situation play can come into play. If we don't spend a lot of time in range here, I would look for this market to potentially continue this move to the upside. Here it is on the TPO chart. All righty, so here's normal variation day. I don't think any of these markets held either extreme of the initial balance at the high or the low of the regular trading hour session yesterday, but there was a lot of data coming out yesterday. A lot of data coming out today too, right? So you opened with a gap. If we ditch yesterday's range, I'll be looking for opportunities to see this market move higher. Right now, it's looking a little bit like rejection of yesterday's range. Try and get good trade location on anything you do. Remember, if you can't afford the risk on the trade, you can't afford the trade. Look for the next opportunity. Now, where is this downside target that I was talking about? If we do reject higher pricing above this area of balance, which we are testing right now, this little TPO sticking out right down here, the level it is at is 78.14. Remember, we're looking for the market to maintain meaningful participation above 78.20, which is the weekly kickoff high. The market could come down here, test down, take out this little anomaly down here. Anomalies are anything that sticks out that doesn't fit. And these single tick anomalies have sometimes enormous powers to attract price. So keep that in mind as well. It's all about reacceptance of balance or rejection of balance at this time. Gold. All right. Well, this has changed a little bit since last time I looked at it. It's range bound in short time frame control Tuesday's low and the weekly kickoff high envelop that range. We've been there last week. We've been down here this week. We've been up here this week. Range-bound rules apply. We fade extremes, and on breakouts that are meaningful, we go with them. So really kind of staying range-bound. I was really hoping to find an opportunity up here against weekly kickoff high, against this 100 session moving average, and last week's high. This was a target-rich environment that we haven't had the opportunity to participate in. What is this 30-minute chart looking like now? Wow. Bam. Overnight inventory, there really wasn't any. This is new business coming into the downside, be it in shorter time frame or not. The market opened not with a gap, straight through value from yesterday, straight through value from the previous day, but still range bound. Be careful trading against a market that is this directional and this one time framing, but you might see a level of support down here. 1954, something like that. Weekly kickoff low is until we get all the way down here. Let's look at the TPO chart, see if we can get any help there. So yesterday was a normal variation day, IB neither extreme, normal neutral day. It makes sense after a normal variation or a normal day with a neutral stance for price to go looking for different areas to facilitate trade. Remember, the market's job is to facilitate trade. All right, so getting a little bit cheap here in the short time frame range could offer opportunity, but remember, always look for opportunities to limit risk. Take a look at the euro. Now, yesterday we had a potential island low that's now been wiped out since the open here this morning. Volume and open interest lost open interest on an up day yesterday. Volume just maintained. So short covering occurred yesterday. Some liquidation of positions. Tuesday's low, we've kind of established an area of balance here. Tuesday's low is vital to remain in that balance. I was kind of looking at this in short time frame control, but it's looking like we've really brought in some volume here and some potential changes. Here's the 30-minute chart, whacked again. Here we go. So we opened in range, already through value. This area down here is a previous gap that we did not yet fill. What I'm finding interesting is we didn't close the gap from the day before yesterday to yesterday by one tick. That created an island low. There was also a secondary possibility for an island low here, but we've now kind of taken that out. So the island low idea is out the window. Looking at this as a potential bear flag, we were seeing some participation and some potential downside momentum below that level. Here's the TPO chart. So there was also a late spike. We opened in the late spike and we rejected it. We have rejected higher pricing, at least for now. The fact that we opened in it gives a hint that the market was willing to open in that late spike and test to see if we could accept up there. But the immediate rejection of that late spike is a little bit jarring for anybody who's holding into long positions. This low here, of course, is going to be somewhat important. We did have a little bit of excess here on Tuesday. But I'm not fighting this downside move until I find some sort of structure from the past and daytime frame structure indicating a slowing of this downside daytime frame auction. Take a look at the 10-year now. Okay. Yesterday we added 43,000 in open interest. Seems like there were possibly some long bets coming in on a little bit higher volume here. So, we're kind of looking at last week's low as somewhat of a pivotal level for us. It may become magnetic. We've got weekly kickoff low with which to still come down and take a look at. We've kind of maybe a little bit range bound here in the medium time frame. Here's the 30-minute chart. Things have changed a little bit, of course, as they usually do after a major release. We didn't really have any overnight inventory. Obviously, we were getting a test of recent lows. There are still some weaker structure down here with which to look for opportunities. We closed this gap, this point of control. We got another gap here with a point of control in the middle of it, another one down here. There's also weak structure above. I don't trade this market, but it's feeling a little bit cheap. And one of the things that we think about you have to think about what the market doesn't do almost or as much as what the market does. It didn't get to this naked point of control down here. Now it's put in kind of a poor low, kind of a weak low here. These exact lows like this. Some people call them double bottoms, and yeah, they can create support, but it also indicates no cessation of a downside auction. All right. Here's the TPO chart. That is not the TPO chart. This is. So in range, through value, weak low, weak low, weak low, another late spike, showing signs of rejection of higher pricing by opening and leaving the late spike to the downside. These weak lows here are indicating that the downside auction is not complete. We've got one, 2, 3, 4, 5 weak lows on the day time frame in a row, and we've just put in another weak low today. Downside auction is sort of saying, hey, we're not done here yet. As far as trade location, that's going to be kind of a tough thing to look for today. All right. So, man, so many comments, so many things to discuss. Yes, you are not supposed to feed me after midnight, Dustin. That is funny. So, yeah, we got rid of the gremlin. Yes, Trade of 8 should still be around. We've sent out a couple of emails. We are working very closely with them to try and get all of these issues resolved as quickly as possible. I don't think that there's any plans on getting rid of it. We just want to make it all right for you and all of you and any of you that want to trade on it. So we're hoping this is going to be a very fast process. There are all hands on deck at Trade of 8/Ninja to try and rectify these problems, and we will be looking forward to seeing everybody. Now, I didn't take the chance to say good morning to everybody because we were a little bit tardy, but I want to make sure that I love you all, and I'm looking forward to your success. I see, Duke Caprice, a lot of my regulars, Scott Saw, and he conquered Theo. It's great to see everybody. And I apologize for not getting through the list and saying good morning to each of you personally. Please don't take it personally. And I will look forward to seeing you hopefully tomorrow morning. I'm not sure if we're going to be able to present a market prep tomorrow morning. But if we can, I will be here. Blessings to you all. Let's take our deep breath. That was a good one. Stay humble, grateful, creative, and centered in your trading today. A little more volatility in the markets. Keep that in mind, and we'll look forward to hopefully seeing you again tomorrow. Again, blessings to you all, and we will see you hopefully again tomorrow. But other than that, get out there and profit. Trade well today.